So we're moving on with the second panel of the day. Now we're going to look into the issue from the eye of the investor. So after a tough year like 2025, in 2026, for investor and corporate investor, they do check up for the companies. They basically try and see what's inside. They see the footnotes of the balance sheets and they make the decisions accordingly. So we're going to look into the issue from the eye of the investor. So this is one of the most critical panels. Our moderator is coming in from Bank of America. Seda Karşı Tiryaki is going to be with us. And let me introduce our panel. Istanbul Portföy Fund Manager Ebru Göktan will be with us. Barings Fund Manager Matthias Siller is going to be with us. Creditstone Strategic Macro Founder Michael Harris is going to be with us. Please welcome them.
Welcome everyone. It's a real pleasure to open the second panel of today, Decoding Investor Dynamics. And Turkey's equity market is obviously going through a very transformative period. And to make sense of all this, we have three very important people here today who sit right at the heart of all those changes. So welcome to each of our panelists. I'm going to give a very, very brief bio and introduce you to each one of them. Our first panelist is Ebru Göktan. She doesn't need an introduction, but Ebru began her career as an equity analyst, covering nearly every major non-financial sector in Turkey. She later moved into equity sales, where she became head of equities at Merrill Lynch and the CEO of the firm's Turkish brokerage arm. She then became one of the founding partners at Bosphorus Capital in 2011 to put her stock-picking expertise to work. And Ebru joined Istanbul Portföy in 2015. Soon after, she was awarded the Turkish equity mandate of the world's leading sovereign wealth fund, which she continues to manage right now. I would like to highlight one fact I think perfectly explains her superpower on this panel, because Ebru has literally said on every side of the financial business, research, sales, CEO, asset management, and partner. So she's one of those rare people who can explain both the local side and the global side, why they often don't think the same.
Thank you.
Our second panelist is Matthias Siller. Matthias is head of EMEA equity team at Barings, and he brings over 30 years of industry experience today to us. He's overseeing about 1.5 billion assets under management with very deep expertise of the emerging Europe. He has first-hand memories of the 1998 Russian crisis. He remembers the old Turkish lira. He remembers when AK Party had their first victory, election victory, and he has watched multiple cycles throughout the region. Matthias is very well known for his discipline and his fundamental portfolio construction. Having your experience and clarity today here is amazing. Thank you so much for joining us. And our final panelist is Mike Harris again. Mike started his career as an equity analyst in Istanbul in 1993, and he joined Merrill Lynch, where he launched coverage of Turkish market plus many other markets, of course. Over his 24 years as an analyst and as a strategist, he was ranked #1 in Institutional Investor for 22 times, and 13 of those was Turkey coverage. He founded Creditstone Strategic Macro in 2017, where he focuses on equity stories, advisory in IPOs, capital market days, and Turkish macro advisory. He has also some academic work at Syracuse University. He is now the director of Whitman School of Management London program. So there are very few people who understand both the data and the narrative of Turkey the way Mike does. So it's a great privilege to have him here today. Thank you, Mike.
Thanks, Seda. Thanks. Nice to be here.
And I have to say that I feel very much at home on this stage today, because Merrill Lynch alumni is making 2/3 of the panel, I just realized. So this is pure coincidence, team. Given that hunger levels in the room, we should start right away. So I'm going to start with my first question, please. It's a topical theme that Turkey is still widely misunderstood. Investors abroad often see a picture, and investors locally see a completely different picture. And the truth probably lies somewhere in the middle. So the question is, what does the market get wrong? And what is the real opportunity for 2026? Let's start with Ebru. Ebru, you're wearing both the local and the global hat, as I just
Yes.
mentioned. So when you look back to 2025 and ahead into 2026, what do the investors most often misunderstand about Turkish equities? And what do you see on the ground, especially, that makes you perhaps more constructive than the headline narrative? Thank you.
Thank you for the question. Hello to everyone. First of all, it's great to be here. So I have to start by saying that I have, like you said, both hats. I'm a local. I'm very Turkish. I've been in this market for 28 years now. But I have a global mandate, which has another set of rules while investing in Turkish equities only. My advantage, maybe compared to Matthias, is that, or my luxury is that I don't have to decide if I'm going to be in Turkey or not. My mandate is to be here, period. So I have to have long positions only. I don't hedge, I don't, short. I can't even carry much cash. So that simplifies things a bit, and depending on where you look at it from. So sometimes it's the difficult part of the business. But having been an investor in this market for years and years now is providing you some wisdom over time, obviously. In an ideal world, referring to a question, I would say, okay, what am I seeing for 2026 that might be different from 2025, is that it will probably, hopefully, be a better year with, this inflation progress continuing at a good pace and, accompanied by rate cuts, better financials, and deep discounts in valuations, which tells us, okay, this will be a great year. But as every emerging market investor and Turkish investor knows, everyone here knows, something will happen.
True.
Something will happen. And that something will make you rewrite that first line that you so nicely and naively put on your presentation for 2026, saying, okay, repeating what I've just told you, you will have to rewrite that line, probably. At best, you will write it just once, hopefully. So, Turkey, this is not only for Turkey, though, but it's for the emerging markets in general, and I'm actually giggling a bit. Developed markets have that too now, because something is happening all the time. So, what makes people miss opportunities in the Turkish market when they move away from the Turkish market, when they have the luxury to move away or move between markets, is that the Turkish characteristic is there is a very important trait of adaptability in Turks. We get hit by something, we fall, we get up stronger. And that's how our companies adjust as well. So you have a very dynamic environment where the companies evolve over time to survive. And what somebody might be deeming as, okay, saying, this is too complicated, I don't want to deal with this market, it's tiny in my big gem portfolio. That somebody is probably missing the highly evolved companies that are sometimes in global standards or better because of what they have been through decades. So why I am more convinced or constructive on the markets is this very fact, the fast adaptability and transformation and dynamism of the Turkish company environment. So I'm not sure if I answered all your
That
sub-questions there.
Amazing,
but
that is so true. But I
that's
have to add one thing here. When that one thing happens, she has a secret recipe. She sings to remain grounded, and that is the secret recipe behind her strong performance year over year, I guess.
I don't stress, I sing. Never sought any psychological treatment being 28 years in this market. Okay, I mean, I used to look like this before. Before I became a fund manager. Sorry, but my head is okay, I think, so thank you for pointing that out. Thank you.
Thank you. Matthias, let's come to you next, please. Because you look at Turkey through, obviously, a very different lens, the emerging Europe and the global EM lens. From that perspective, Turkey has clearly shifted away from being a simple macro proxy. How do you see Turkey's role in a portfolio today? And what makes it interesting again in 2026 relative to other emerging markets?
Yeah, well, firstly, let me give a quick shout out to TÜYID and the sponsors today. It's a fantastic presentations you all gave, and a great place to be. So I'm really enjoying that. Coming to your question, and I would say, you all have a great message to bring to international investors. And with one word, it would be, I think, correlation. We've heard a lot about different concepts today in IR and beyond that. But I think what I want to add is the one of correlation. I think Turkish assets, not only equities, but Turkish assets more generally, at this stage will attract attention when you mention correlation. I think global markets have become incredibly correlated to this stage, and I think Turkey could really add something here where you can diversify without having to sacrifice a lot of performance potential going forward. Even if you look back now, even if you apply the historical method and look over the last 2 years, you will find out that Turkish assets correlation to international trends is very low, right? I think that's already giving you a big indication of which direction we can head if you are confident that you can generate value. And I think what I heard from you today is that most of you are actually confident that you can generate value going forward. You should also be confident, and that's my message, you can combine that with that being a story of your own and relatively independent of global market moves. I'm not saying relatively independent of geopolitics, but mind you, geopolitics nowadays, right, and also the previous speaker highlighted that, is affecting everything, right, even and especially the US market. So I think Turkey right now at this stage finds itself certainly in an interesting spot. Turkish assets and especially Turkish equities, from that perspective, i.e. the correlation and returns perspective, have never looked more interesting to me.
Wonderful, thank you. And maybe to evolve on that, Mike, you also often mention that we need to distinguish between the company-specific story versus the macro story, the country story. So in your view, what does the market systematically get wrong about Turkey? And what is the genuine equity opportunity for investors who are willing to look beyond that traditional macro levels, political levels?
Yeah, I think one thing that if most foreign investors that have looked at Turkey for many years have this historic assumption that what foreign investors think matters a lot, and increasingly, as Matthias said, the lack of correlation reflects the fact that this market is domestically driven. So, a foreigner who is distant and looking at a 30,000-foot view, and we had interest rates here and inflation here, they said, no, I'm not going to touch it. But actually, those that were more granular and could scratch the surface, this was a great opportunity. There was financial repression, this was inflation hedge. Every single company had pricing power. So there was and then of course you had this stage where we had still an inflationary wage dynamic, but we suddenly had a deflationary monetary policy dynamic. So suddenly you had inflation, but a strong currency. So that was a real opportunity, but you had to get granular. Now, going back to those individuals that avoided the market because they didn't like policy, they have been coming back. Obviously, a lot more trips, a lot more these global. Matthias is always on the market. He knows what's going on. He's like a local investor. You know, he'll know what you're doing. He'll oftentimes, hopefully, you know, be a little bit ahead of you. But when it comes to global emerging market investors, Turkey's tiny in the index. Remember the area when it used to be 6 and 7% of the index?
Yeah.
Turkey, unfortunately, doesn't have any big, globally relevant, like futuristic listed companies. You know, for what it's worth, I wish Hepsiburda was listed here instead of in NASDAQ. And if you're talking to Caspi, please encourage them to do a local listing. I think on balance, we need more companies to make it bigger, but in the absence of that, most global emerging market investors right now have nothing in Turkey. And that, I think, is an opportunity, because it means that every single global emerging market investor knew they shouldn't be in Turkey because their boss would say, why are you there when interest rates are single digit and inflation is pushing triple digits? If it went wrong, you'd get fired. So you just didn't do that as a global emerging market investor. In emerging Europe, yes, because you're always going to invest in Turkey to some degree. You have to have a view on Turkey. It was easier just to forget it. And I'll also say geopolitically, there was a period where tension between Turkey and the US reflected through Syria caused some people to really wonder what was going on. So you had both geopolitics and economic policy turning global emerging market investors away. Now, though, there's been the rationalization geopolitically. That's been very, very positive and well received. So we no longer have that constraint, if anything, moving in the positive direction. And also the disinflation program. All these people that we're visiting, okay, they need to buy, if you're a big global emerging market investor, you need to buy a large position because you don't want to have 200 stocks. You want to have maybe 80 stocks, maybe 100. And so you're not going to own more than one stock in Turkey, but you want to probably do it instead of gradually when a transaction comes. So when you have a secondary, people will pay attention to it. IPOs are tougher because they take longer and the windows are longer, but people will pay attention because they own nothing in Turkey right now. Before that was a conviction view. Now they have less conviction because things are working. We saw it up until March, and then we had the March event, which caused some people to say, oh no, right? When you see protests on the street. So those people that have been doing models, I talked to funds that own nothing in Turkey for 7 years, and they're doing models on 5 different companies right now. They're doing their work, they're getting ready, they're going to pull the trigger on 1 or 2 of them. If it's an IPO, they'll pay attention because it's a new story that they hear, but they're doing this on existing listed stocks. My sense is as interest rates fall over the next 6 months, and we could have as much as a further 800 basis points cut to interest rate, probably by June, that momentum will drive interest and people will pay attention. The disinflation, I'm going to end this with one last comment. Everyone's worried about the disinflation. We're so far above target. If you look at October inflation, 2.55%, right? That sounds very high. But October inflation from 2005 to 2020 was 1/5 of full year inflation. So if we use that historic trend and annualize October, we're annualizing sub 13%. November. Yeah, that was a surprising stat.
I can't believe it.
Matthias is not reading my research, it seems. Okay, and if you look at November, obviously that was a good print. That annualizes, if you again use 2005 to 2020, again sub 13%. If wages remain deflationary, we are going to see rate cuts, people, and that is going to pull people into the market. This is your opportunity to compete to be that 1 or maybe second stock that those gem investors own. And if you win that prize, you're going to love your job over the next few years because they're not coming in and selling when the first event happened, the first surprise that Ebru mentions. They're coming in knowing this is something I will own with full expectation that something may go wrong in Turkey, but I'm finally comfortable with most of the parameters, and let me ride through the politics.
That's wonderful. So we have the perception, we have the reality, and somewhere in between is the opportunity that we need to kind of scrape the surface. I'll go to my second question, which brings me everyone knows and agrees probably that the investor base in Turkey today looks nothing like the investment base 10 years ago. We have a lot less foreign investors at the moment, a lot more locals, more retail, and an entirely new layer of algorithmic trading. So the question is this: what does this new landscape actually mean for companies and for IR teams and for the way stocks behave? Ebru, let's start with you. You see firsthand, as we mentioned, dramatically Turkey's investment base is changing. How does this change the logic of the market? And what
it changes it a lot.
What should companies perhaps understand about how their stocks trading in this new environment?
Okay, like Mike said, there are investors who have not been in the market for 7 years, 8 years, and that I'll back that data up, argument up by the fact that since 2017, there have been consecutive years of cash outflows from foreign investors, which has led to the fact that the foreign ownership and free float, which was around 70%, back in 2017 is now at around 30%. So a big chunk of foreign investors has left because of the various reasons,
And just to interject,
we mentioned
that
probably.
30% includes offshore Turkish money.
Exactly, that's what I was going to say. So let's say this is foreign in brackets, let's say, or whatever. So, so this has changed the landscape a lot because in the past, this was a market 70% owned by foreigners, which meant the ownership of stocks was longer term and based on fundamental reasons. Not that I'm saying that, you know, locals are not looking at things fundamentally, but this is a bigger generalization, let's say. That is mostly true. And then the majority of the trading volume came from local investors. So 70% ownership foreigners, 70% trading locals, which had shorter term positions and not necessarily cared about fundamentals. They also looked at technicals, etc., etc. So right now, in this environment, we have 70% of ownership in the locals and 70% of the volume is dominated by locals, which means that what the current audience of companies trading in the stock exchange is looking at is far from what the foreigners were looking at in the past. So as companies have to adapt, I mean, that's the word I keep using, you have to adapt to the fact that the audience is different. You have to probably educate that audience to prevent extreme volatility to happen based on very superficial information that's shared in the market. So you have to protect your company and stock performance by being aware of this new audience, and two, educating this audience, because the levels of financial literacy and the approach to investing is totally different. This is not a waste of time. Why? Of course, these levels of ownership will change as things get better, but you will have another base of investors who will know about your company, even if their share falls in the market. And that will prevent the volatility that we've been seeing in the past years, especially last year. I mean, you cannot really make sense of what's happening in the market anymore, because the things that you think fundamentally should perform don't perform, whereas other stocks which might not be on that radar of yours go through the roof, or the opposite direction. So you have to make sense of what's happening in the market as companies and as investors. So what was the question? It was basically, what do we do in this environment? As an investor, I try to adapt to the changing landscape. I'm still a fundamental bottom-up stock picker, but I'm watching the market and trying to understand the new audience and act if I have an opportunity to benefit from that new audience's approach as well, to keep my portfolio dynamic and outperforming, obviously. So I'm finding a new balance, and companies have to find a new balance in communicating to this new world of investors, I think.
Absolutely.
Did
Finding
I
a
answer?
balance,
Okay.
adapting, those are the key words we are taking away from this. It's, you know, the rules of the game has changed and we do need to adapt. So that is so
That
true.
was the question. Yes.
Matthias, I will come to you next. You often speak about Turkey offering lower correlation and more of a stock-picking portfolio profile, than before. With today's mix of locals, maybe fewer foreigners and more electronic trading, how do you think Turkey from a risk and portfolio construction standpoint?
Yeah, I think I said it clearly before, right? I think, you know, right now Turkish equities find itself in a very interesting spot. I would also remind everyone, right, or I don't have to remind anyone in this room, but I will remind my peers that there are actually quite a few Turkish companies who have done, you know, on the stock market extremely well, right? And that, you know, if you look into aviation, if you look into food retailing, if you look into food, if you look into infrastructure, there are names there, right, who, you know, contributed positively to any portfolio in the world in the last couple of years. So it's not, and that in itself already is testament to the stock picking argument I made. The stock picking argument goes both ways, right? First of all, I think it's additional attraction, right? So the market itself looks good, interesting, you know, low correlation, and then you can pick stocks. So I think that for a lot of active fund managers, that will draw them to the board, regardless if Turkey has 10, 15, 0 or 1% weighting in the index. I think the stock picking argument is what gets people attracted. And that's a fantastic opportunity. Low efficiency, low correlation, good return potential is amazing. So that certainly stands out. Second argument being is, I think what we're having here today is not one-sided, right? I think that this is a discourse, and you need, as IR managers and investors, we also make sure that the capital allocators, as we heard, right, the management also takes note. I think, with all due respect, I think management has probably also get accustomed to the fact that Turkey is a difficult place, right, and a low part of any index or indices, but I think they should be more proud, even more proud, more active, right, and also start to think more actively about capital allocation, not only in terms of growth, organic, inorganic, but also in terms of buying back stock and cancelling them. I think that would send a good signal. Why? Not per se for stock cancellations, but we all agree the market is cheap, right? So if you allocate a little bit of your capital, right, to buying back stock and canceling it, it automatically creates value. And I think the companies who will go down that route, and I bet you 5 years from now, 75% of the companies that are currently in this room will do it. But those who do it first will get the halo effect and will see their stocks rise more than others.
Wonderful. Well, it's not a binary call anymore, top down or bottom up. As you said, you know, we need to dive into the operational excellence, as Rebecca kept saying a few minutes ago. But here I must admit that Matthias analyzes markets for a living, obviously, but his real passion is history.
Yeah, that's true. Yeah. I mean, I think everyone's passion is history in a way, right?
Exactly.
That's why it's so lovely to be in
sociology, team sports. So he has all these, which probably explains why his portfolios view those different, you know, carry more humanity than just numbers. And he gets to know the management well, as he has probably met with, you know, most of you in this room. So that's the foundation of real conviction at times.
Yeah.
And Mike, over to you, please. Given the noisier and more fragmented market structure, how should the companies think about demonstrating the strength of their equity story so that they stay committed through all this volatility we are talking about?
Well, Ebru mentioned the resilience of all the companies and over history and all that. You know, we respond to such an ever-changing environment. Rebecca mentioned, I think it was her talking about the tattoo she doesn't have is don't own the macro. I think a lot of you sit in meetings and investors are so curious about the macro that the macro discussion can take half the meeting. Yeah. Okay? And then they might also be asking you questions because they own a competitor, because they're trying to figure things out. This is your meeting, not theirs. Okay? You need to make sure that in that meeting you get your message across and you bring everything back. Don't get diverted into talking about, let everyone has an opinion on macro, right? And everyone's opinion is valuable, but the best thing they get from you is more understanding of your differentiation. If you just give them a view on interest rates or inflation or what's going on with growth, you have contributed to their macro understanding, probably for someone like Matthias, who always cares about Turkey, but the average GEM investor is not going to come in here and spend all their time talking about what's going on in Turkey. They want to know, is this company I'm spending my time with actually worth me doing work on? So one is, own the narrative, own the meeting. Of course, you're going to answer their questions, but don't get lost in the macro, which is way too, and the politics, obviously, which is way too easy in Turkey. The other point is the resilience. Don't take it for granted that just because you have a track record of resilience, people understand it. The returns on capital that was mentioned by Rebecca earlier in terms of how important the capital allocation is, and I think it's specifically return on invested capital is the most important metric over time. You've had the biggest changes in WACC of like any country, right? Constantly. And showing how it is that you invest through these cycles. It's proof points. It's proof points. It's not taking anything for granted. Give them clarity. When they walk away from the meetings, like, wow, I see how they respond to things. I remember, maybe it was even before your time, Aslı, when you were at Ford Otosan. I covered it back in, this was in 2001. I remember listening to the CFO back then, and he goes, I was stunned. We stopped production within a couple of days of a news event that I had no idea was going to cause things to collapse, right? And we just stopped it. But it was the realization that we are not going to build inventory in an environment that has this much uncertainty. So part of it, I think, is when people walk away from a meeting not understanding your resilience, when we talk about the investor deck, what Rebecca said about having a 101 deck, right? What is your company all about? That deck needs to be populated with proof points. You don't go and talk about the earnings after an earnings thing. You talk about your narrative. What I like to see in every earnings call is a reinforcement of the equity story. So you're going to get valuable time with some GEM investors. You're competing with every other emerging market. You're competing with India, where they want to put more and more capital generally. So take advantage of that meeting for them to walk away and say, wow, they're a best practice operator. When it comes to the AI discussion and stuff like that, give them proof points. Make them think, wow, I haven't heard this from any other company. Don't look and see what the industry standard on AI is yet, because it doesn't exist in terms of communication. Lead it. Say, this is how we're using it. This is why it's making a difference. And every data point you use in your proof points that shows your competence for data impresses them, because it shows that you're on top of things, right? You actually have all of this data at your fingertips. And if you just look at a presentation and this is our historic growth rate, this is whatever it is, this is our margin, they're not going to get that sense of what's really underneath the DNA of the company. Let's talk ESG as well. Most companies will put it just at an end, right? When I do IPO advisory, every single analyst presentation, we do the whole analyst presentation, then everyone's like, oh, where are we going to put ESG? Obviously at the end. Now let's start to think about it. No, you should have ESG and AI metrics populated throughout every page of your presentation. And it's not ESG for the sake of doing good. It's ESG for the sake of less resource for higher output, right? That's really what the environmental focus is ultimately on. Any impact you have. And the other thing, when it comes to people, it's meritocracy. Right? We are rewarding people for good behavior, and we can show you we have the systems in place. So I think you get more credit from showing how you do things than just the outcomes. So I would say proof points, without a doubt.
That's amazing. I couldn't agree more. Well, we did talk about perception. We did talk about the market dynamics, market participants. So I would like to move into my third and final question, to the heart of the summit, the IR intelligence. We have obviously touched base a little bit of that, but let's go a little bit deeper. What should the companies actually do? What are the actions that move the needle for investors that investor relation teams should be doing? And Ebru, thinking about all the companies you meet throughout the year, what are the 2-3 IR governance behaviors probably that instantly build confidence for you? Or maybe in the opposite way, the recurring mistakes that you see that immediately kill the momentum of the equity story for you?
Okay, so we have, as a team, around 100 meetings a year. So sometimes I don't attend anymore. Why? Because there is it's human nature to get complacent at one point. And there's a tendency, or there's something I see in some presentations of some companies, is that it's the very same presentation every single year with the numbers changed. I know on which page, on which paragraph, which information will be provided, which makes things, you know, a bit boring at one point, because we want to come out of meetings saying, okay, I didn't know this. I mean, I'm so happy I learned this new piece of information, and I will use that to, you know, reassess this company. So I think one of the biggest pluses I see is excitement from the investor relations person, the willingness to tell me something new, the willingness to get out of the routine, and being proactive in all of this, and being proactive in reaching out to me even if I'm not calling to visit. That's a very important trait. So credibility, accountability, in-depth information, getting back to questions, answering questions. That's our first, desire. Answering questions honestly. All of this is very important in making the investor come out of a meeting of a company which they've known for 20, 30 years with renewed information. Otherwise, it's a routine, maintenance meeting, which doesn't bring anything new to the table, not for the company, not for the investor. The no-nos, obviously, these are the things that are very important and very motivating, but the no-nos are related to ESG partially and to corporate governance. You have to be reliable and accountable and honest in representing the company. And this is not for investor relations only, it's the company management itself. And we have had cases when, there have been great stories told, and the next month the shareholder who tells that story, and you've bought that story, comes out and sells the majority of their stake, let's say. Where's the story now? Or there have been misinformations, withholding of information. I'm not talking about Turkey only, I'm talking about cases we've seen over the past decades, let's say. So I think anything steering clear of that is positive. Anything making the effort to make things more dynamic is great, because I loved Rebecca's speech. I don't know if she's around, but I think IR is very important. I mean, you are the face we're looking at the first place. So I think all of these combined make great contributions to investors.
That's a powerful message. No, that's wonderful. I mean, if I captured correctly, you're literally saying confidence is built through clarity.
Yes.
And then, of course, it's broken through inconsistency.
Definitely. And when it's broken forever. I have my restricted stocks in my mandate, but I have my personal blacklists, which I will stick to. So if I stick to that and I don't ever, there's a nice Turkish saying, even if you catch a bird with your mouth, I'm not going to touch your company anymore, because you've lied to me at one point, this way or another. So don't get into that zone. I mean, hearing information that might not make the investor happy is okay, because nothing is going to be perfect every year. No company is going to do that. But hearing false information is the terrible no-no. So don't sugarcoat, don't just be, honest in information
open and
related.
upfront, yep.
Yeah. So I'm done.
Matthias, if I got your earlier conversations correctly, you're saying the playing field is not easy, but it has rarely been this good for Turkish companies only if they choose to use it, right? So from your seat, I'm wondering, what should IR teams practically do to qualify as one or two or three of those high-quality names that perform despite the, macro stories, volatilities that the global investor is willing to perhaps own, through this noise?
Yeah, I mean, I don't want to be that exclusive, right? I think, but as a matter of fact, be confident, right, about what you have to say. Own the narrative. People will listen to you. Don't hide behind macro. There's no reason to do that, and no necessity. There's, the whole room here is full of fantastic investment stories.
Definitely.
That would be, so the confidence, right, to IR teams would be what I would like to see over the next couple of quarters. And like I said, I think, and you highlighted that, times have never been better, even though it doesn't really feel like that. I think times have never been better to get the story across, firstly. Secondly is, I would encourage you to start lobbying for an IPO of Borsa Istanbul, right? Ultimately, that's, we haven't mentioned Borsa Istanbul today, but that's our playing field. It's a fantastic market, and it would amplify your message tremendously if the stock exchange would be listed on the stock exchange. Yeah, that's it.
Borsa Istanbul. We are all waiting for that. So I guess EM funds are not shopping for Turkey, but they're shopping for corporate excellence. Before I turn to Mike for the final questions, final set, I have to share this one. When Mike prepared to cover his very first Turkey stock in 1995 as a young and very nervous Mike, of course, he called the CEO of a company in Izmir way too many times that the CEO eventually told his secretary, please transfer him to the competitor's switchboard. That's, where we're all coming from. And as if that's not enough, decades later, Mike wrote an article in The Guardian about the UK government's plan to tax private schools, which triggered 850 angry comments in the first 2 hours. They had to shut down the comment section. So if anyone here knows real feedback is, that's Mike. And with that, I'm going to my question. Mike, you often say that, and this is really important, investor relations should operate as C-suite light. That's a word that I learned from Mike, and I think that's important, powerful. Not just executing, obviously, but shaping the equity story. So, if you have to be very direct with the people in this room today, what is the single most impactful change, on top of what you have already mentioned, in company behavior, in the investor relations behavior, which would meaningfully improve things going?
Well, I didn't have the interpretation thing going, so I was, my Turkish is sort of 70%, so I got most of what the TÜYİD CEO was saying about how important investor relations are. And I think, if I understood it correctly, mimic that. Investor relations needs to have a seat at the table. They need to be hearing everything. The feedback you get from investor relations, this is not an execution-only function. Too often it is treated like that. This is one of the most, we've heard already before today, valuable feedback loop. And the importance is, a lot of times it can be strategic feedback as opposed to equity story communication. You as head of IR need to say, okay, I'm getting these questions. If you keep getting the same question quarter after quarter, meeting after meeting, again from the same investor again, you're not answering it right. Okay, so hold yourself to a higher standard and say, okay, we're not proving this. We're saying it, but people aren't believing it. And a lot of times it might be a macro-related question. What's your exposure to the currency? What's this? Whatever it is. But go, dig deep and answer it. But the other thing is, when it's an execution-only function, it's sort of protected. It's under the CFO, and then the board, have someone on your board that has public market experience. Whether it's a former analyst, a former fund manager, a former head of IR. You need to have someone at the board that and you might not like this as head of IR because it means someone's going to be policing you and looking at you, right? This is, I think, very, very important because we take it for granted that maybe put it another way. You have the luxury of hiding behind the fact that Turkey's out of favor to say that's why our stock is where it is. But sometimes it might be because you're not actually either proving your equity story as well as you could be. So always push and say, what is it that I learned from this meeting that will make me evolve my deck? And the other area is, well, sometimes actually strategically. There's an important feedback here that we're not answering, and maybe we need to evolve. All this discussion about how are we using AI, as Rebecca was saying before, we need to think constantly about, everyone's doing that now, so it's sort of obvious, but even think about it for everything else. If we're getting a question about our strategic direction, our competitive, our differentiation, if people aren't getting it, maybe our strategy needs to evolve as well. And that's why I think you need that feedback loop that's very, very strong. So, former IR, former analysts, former fund managers, former salespeople, I mean, fantastic. Salespeople have that, perfect combination of both combination of analysts and combination of hearing everything from investors. So I feel strongly you need someone like that on your board, and the head of IR needs to be empowered so they are, not speaking to the board by invitation, but regularly speaking to the board, and also sitting in all the C-suite meetings.
Again, very powerful messages there. Thank you. To all my panelists, thank you all for your generosity with your time. Some of you traveled from overseas just to be here with us today, this week. And each one of you brought different lenses, obviously, and together you delivered far more than perspectives. I think a big roadmap to everyone in this room, a roadmap for how Turkish companies can own their equity story and how IR teams can shape strategy. So I think that's important. And to the audience, I know you're very hungry, but conferences, summits like this matter, but communities actually matter more. So today, you all proved that why Turkish investor community here. So thank you for listening. I hope you had some good takeaways here. Thank you, everyone.
Çok teşekkür ederim.
I hope I didn't, take the
Thank you
mic
so
much.
much.
So thank you.